Now let's look at how the accounting equation help in the recording of financial transactions. Now let's see, we've got these three statements. The first statement says Mr. Manema started his business with $23,000 in his bank account. He also borrowed $14,000 from the bank at the cost of 3% per annum. He would use his van worth $12,000 for the business. Now let's try to identify which are capital elements, which are assets, and which are liabilities. We said capitals are what the business started with. Assets are what the business owns, and liabilities are what the business owes to other business or to other entities or people. Whichever the case, okay, let's look at capital elements. Now each financial transaction that happens in accounting, it comes with two effects. It affects two accounts. So for example, Mr. Manema started his business with 23,000 in his bank account. Now let's look at the two accounts which are affected. Each transaction has got a debit or a credit effect on the accounts. Now let's look at the first statement. It means capital was injected, let's say shares, 23,000. This first 23,000. The money was injected into the bank account. So now we come to the bank. The bank also has 23,000. We also have the second statement which says he borrowed 14,000 from the bank at the cost of 3%. Actually, when the bank gives you a loan, they will deposit that money into your account, so your bank account will also increase. So now on this second statement, the bank also increased with the loan amount of 14,000. Now the loan in our books, it actually comes as a liability. He also borrowed. Now this is a loan which was borrowed. Now it's a liability to our company. So we have to add it under liabilities, 14K again. Now let's look at the third statement. He would also use his van worth 12,000 for business. Now this person is now injecting another component or a vehicle into the business for use. So it's like he is injecting capital. So he is injecting capital worth 12,000 in terms of the vehicle. The vehicle will also be transferred into the business at the same amount. Now let's look at these elements that we have just recorded. There are actually three statements that we've recorded and three transactions. They also have each having a debit or credit effect on our accounts. Now let's look at the implications of these items and try to form our accounting equation. We said capital is equal to assets minus liabilities. Now let's look at this. Let's total our capital, our assets, and liabilities. Capital is 23,000 plus 12,000, which gives us 35,000. Our assets, they also have the initial amount which was put in the bank of 23,000 and the second amount which was put into the bank of 14,000 as a loan, and a motor van which was transferred by the owner into the business at 12,000. So totaling this will give us 59,000. thousand. Then we go to liabilities, we only have 14,000 in form of loan. Now let's see if our accounting equation will balance. Capital, which is 35,000, is equal to 59,000 minus 14,000. And 59,000 minus 14,000 gives us 35,000. And our accounting equation is balanced. That's the accounting equation for you. Remember, the accounting equation is the backbone of accounting. The accounting equation captures everything that happens in accounting. In accounting, everything either has a debit or a credit balance. So we are saying your capital, the money that you use to start the business, is equal to assets minus liabilities. Assets, what the business owns, deducted by what the business owes to others. So that is the accounting equation for you. We also need to know how the accounting equation relates to the trial balance and the balance sheet. Now let's look at this thing, the trial balance. The trial balance is actually the list of all the items with a debit or credit balance. It's a list of all transactions in the business. It also has the same relationship. It's based on the accounting equation. Let's see how the trial balance is based on the accounting equation. Now we have got the following items: trial balance, we say this is a list of all the items on the debit or credit side. Okay, so we have debit and credit. Now let's look at the first statement. 23,000. What he started his business with $23,000. Okay, it means we have the bank account with $23,000. We also have the share capital with $23,000. Second statement says he also borrowed 14,000 from the bank at the cost of 3%. Now we have a loan for 14,000. The loan is a liability, it actually goes on the credit side. We also have another money injected into the bank for 14,000. Now let's look at the last statement. It says he would use his motor van worth 12,000 for the business. Okay, so another asset was added, which is a van, 12,000. On the credit side, capital was added. $12,000. Now the accounting rule is that the trial balance should always balance unless if there is an error. Okay, so if we look at this, the thing on the debit and the things on the credit side should give us the same total. And in this case, they give us the same total of 59,000. Now that's the relationship of the accounting equation to the trial balance. Now let's look at how the accounting equation relates to the balance sheet or the statements of financial position. The first component will be the non-current assets. Let's look at the first statement. Mr. Manema started his business with 23,000 in his bank account. There is no non-current asset there. The money was put into the bank, which is a current asset, and the other money goes to capital. Okay, let's look at the second statement. He also borrowed 14,000 from the bank at the cost of 3%. 14,000 goes into this bank account and the other 14,000 goes to the loan. There is no non-current assets. Now let's look at the third statement. He would use his van worth 12,000 for business. So the non-current assets will come to be motor van. 12,000. Now let's look at current assets. The current assets, the first statement we have got 23,000 which was injected into the business, and we also have 14,000 which was injected into the business through a loan. So now the bank has 23,000 plus 14,000, which will give us 23,000, which will give us 37,000. So now the total assets will be 37,000 plus 12,000, which will be 59,000. Now let's look at the component of capitals and liabilities. On the first statement we have got this 23,000. Then on the second statement there is no item of capital. On the third element we've got 12,000, and this will give us capital of 35,000. Now let's look at liabilities. Liabilities are there on the second statement. He also borrowed 14,000 from the bank at the cost of 3%. Now the statement of financial position is also balancing. Share capital and liabilities will give us the total of assets, which is 59,000. Now you can actually see the relationship triggered by the accounting equation to the statement of financial position and the trial balance. The accounting equation is the basic thing. It will show you which items and where do they belong. All items which are falling under assets, they've got a debit balance. All items which fall under capital have got a credit balance, and all items which fall under liabilities also have credit balance. So that's the accounting equation for you. Let's meet in the next lesson. Thank you so much.